Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from the market site in Times Square. Joining me, we have Steve Brown. He's a managing director on Nasdaq's market intelligence desk. We're going to take a check at the markets at 2:30 Eastern. Steve, it's great to have you with me. As always, and you would think for the second quarter earnings season, it's so compressed into 3 to 4 weeks. We have big tech reporting this week. We have the big banks reporting this week. Kind of light on volume, though.
Light on volume. I mean, if you look at the volume, you wouldn't know anything's going on. We haven't even hit average volume since July 1st, and it's been steadily quiet ever since.
Do you think the markets are focused more on macro than they are on earnings this time, or are they just kind of thrown this out the window because the expectations are so low?
It's, they're focused, but the volumes are low. One, because the markets are not moving much. They're pretty much standing in place, so there's not a lot of the gyration volume, if you will. You do see high volumes in individual stocks here and there based on earnings, but in aggregate, this is a typical quiet summer. We've had any big market moves lately, and it's just going to be quiet. All
right, let's pull up the S&P 500 index chart. Still above that 200 daily moving average.
Yeah, it's really interesting. I put this up there, and what struck me, we're talking about the markets at record highs just a few days ago, but if you look at it over the course of a year, this 200-day moving average, which is almost a full year, I mean, it is essentially a flat line. So we get the big declines, the big increases, but all in all, the markets are not going anywhere very fast. Slowly going higher, but very slowly. It's the same scenario if you look at the Dow and the Nasdaq Composite. The only one that's showing a slight decline is the Russell 2000, which of course are the smaller stocks.
I mean, it's almost like if you did not look at your 401k from the end of October to now, you have no idea that we even had this move in December. It's almost like that sweet spot was to get in there and then kind of take a look at the market. Other than that, what are we, a percent off from where we were? Yeah,
it's interesting. The market is up. S&P is up 19.4% for the year. That's the third best over the last decade. So it kind of raises the question of, gosh, what more is left for this year? I mean, it seems unlikely we'll get another 19%. Stranger things have happened, but where do you go? That's another reason for the slow volume. There's do you buy? Yeah, what do you do?
Asset classes. Let's take a look at housing starts. You identified that as a key piece of data this month.
Yeah, interesting. We get housing starts. The housing market's been in decline or slowly sinking, and you see these headline numbers, and they don't look so good. So today we have housing starts out down about 0.9% over May, from June to May. Building permits, applications for new housing also down, but that's the top line stuff. If you look down a little further, it's not quite so bad. The big difference this time, residential single family homes are going up. That's an increase. What's pulling the numbers down are the multifamily, the apartment buildings. Of course, they're much bigger, much more expensive, and they tend to be very volatile because you're not doing those every day. So that's where the weakness is. It's not so much in the individual homes. In fact, if you look at the numbers, individual homes, there are a lot more being sold now and built than there were, say, in December. So it's actually picked up, even though you still see negative numbers.
Which is so interesting because particularly in New York and New Jersey, I see for sale signs everywhere.
It is, and it's interesting, and the Northeast had the highest number of single-family residential starts this month, over 31% increase. So that's big, but you still, it's a mixed picture.
All right, now for the remainder of the week, what else are you taking a look at?
For the remainder of the week, of course, we'll have weekly unemployment claims tomorrow. The bulk of the economic data is out for this week. We'll have University of Michigan Consumer Comfort on Friday. None of that should be market moving, though.
All right, Steve, thank you as always for joining us at MarketSite.
Sure.
And thank you for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.